This is Miranda Kerr, a stimulatingly elegant worldwide supermodel who's recently found success in the world of business with her own cosmetics brand, Cora Organics. What's behind this newfound success in the world of business? Is she just a pretty face? I would argue that the most underestimated factor in her rising affluence is, yes, you guessed it, well-planned financial statements. Financial statements are the formal records that convey the economic activities of businesses like Cora Organics to permit people like Miranda Kerr or admiring stakeholders to make informed judgments and decisions. They're usually prepared in the following order. The statement of comprehensive income, or the profit and loss statement, in its most simplistic form shows a company's revenues, less expenses, which will give you profit. Profit is definitely the sexiest and ideal indicator of financial performance, because unprofitable businesses suck. Knowing profit is essential in preparing our next statement, the statement of changes in equity. The format again is simple. Retained earnings at the beginning of the period, plus profit during the period, less dividends equals ending retained earnings. This yields a viewpoint into what businesses do with their profits, whether they issue dividends or recirculate earnings for future investment. Retained earnings are shown in the statement of financial position, which shows an economic entity's assets, liabilities, and shareholders' equity at one moment in time. Assets are what a company owns and can be categorized in account names shown below, ordered in terms of liquidity. Liabilities show what a business owes outside parties, shown in unearned revenue or payable accounts, while shareholders' equity, the difference between assets and liabilities, shows whether a company is running on retained earnings or whether its resources were gained from contributed capital. The fundamental accounting equation, assets equals liabilities plus shareholders' equity, better hold true or else somebody's screwed up. Here is Miranda Kerr again for your enjoyment. Fourth and finally, we have the cash flow statement, which displays an entity's sources and uses of cash in three groups. Operating activities refer to the day-to-day purchase of things such as supplies or payment of employees. Investment activities generally refer to those required for generating and repaying cash to creditors and investors, whilst financing activities generally refer to the purchase of income-producing assets. Analyzing the cash flow statement is so important because cash is the medium through which most business transactions occur. Wait, so all you need are comprehensible financial statements to be like Miranda Kerr? Well, almost. They still have to be prepared within the correct legal guidelines. You see, in 2009, Miranda's ex-boyfriend was idiotically convicted of financial fraud and forced to pay $123,000 in fines. This is because he failed to follow various laws that govern accounting standards set up by bodies like the International Financial Reporting Standards Board or the Australian Accounting Standards Board. However, it appears Miranda has heeded this valuable lesson since that time, her career has hit its amazing heights. That is the true beauty of accounting. I can't imagine where Miranda Kerr would be without financial statements, but more importantly, I can't imagine where I would be without Miranda Kerr.